Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Tuesday, and we're at the 7th of May, 2024, 6:15 p.m. Central Time. You know, it seems like it was weeks ago, but the jobs report was just a few days ago. It shook the market in the sense that we got a very low number. The market put back onto the table. The Fed is probably going to do a cut, if not cuts. And the markets have been reacting to it ever since. In addition, they're dealing with, at the same time, the Israel-Hamas situation. Now, as I understand it, both parties are in Cairo. There's talk that they're trying to find a solution if they can. Israel's shown its force. Contra to what President Biden wanted. Israel went in last night and took over the Rafah crossing. Yeah, I understand it is going to open up other crossings tomorrow, but not that one. They're going to go in and try to destroy, as I understand it at least, some of the tunnels where the arms are brought in through there and do whatever they have to do. At the same time, I put out today a letter in my morning commentary, and I showed the amount of some of the pictures of the tanks that had gone in. This was not like, hey, let's send in 5 or 6 tanks and we'll get in there. You had to see that picture to understand it. That was taken today. And it's really a show of force. But they went in. You didn't hear that they blew things up. You didn't hear that mass amount of people were killed. That's coming if a deal can't be had. And I wonder if going in there, contrary to what our president wanted, President Biden, wasn't really the best move, because now it's the show of force. If Hamas doesn't want to agree, you know what the next thing's going to be. I mention that in the metals because the metals are backed off a bit. But has the inflation story died off? It hasn't. It's coming down slowly. But at the same time, what's the dollar going to do and what are interest rates doing? We have been watching the interest rate story fall. Instead of us being at a 5% rate, we're under 4.5% on the 10-year note. This is important. So the market is, again, the people that thought we're going from 5 to 6%, they have been thrown for another loss. This has been the year where the pros that came out with all their ideas on interest rates have been horribly wrong. I understand it. I keep my eye on the energy. You know, if you wake up in the morning, you're up $1, $1.50, you know that things didn't go well in Gaza with the talks. You know that if you're down another $1, they went very well. That'll weigh initially probably on the metals, but I think we're in an area where you're going to get a lot of interest. What we've done is we've pulled back, and this is just a closing basis, and you can see where the market is. As long as you stay over the 18-week moving average of closes, this is a weekly chart, bias is up. Bias is key. We have gone in 2 levels to the downside. Doesn't mean you can't go to another level down. But you keep your eye on this right now because you're void of a trend. You have a higher high. You have a lower low. The market is staying underneath the 18-day average of closes. In order for the market to turn bullish, at least I need to see a close over the 18-day average of 2348.60. Until that happens, I'm looking at a market void of a trend. The support did come in and the break stopped against the Bollinger Band. Remember, the Bollinger Band's an algorithm designed to keep the market trading within it 95% of the time. You want the market to hit it. If you went to 100% on the variables, what would happen? You never hit it. Why put it on the chart? But when you hit it, up or down, it's a theoretical resistance zone. Does it have to not stay to the left of it? No. It can get over it from time to time. It's a sign of strength. Then it rides it. But when it steps away from it, it's like a weight. It's lost that bullishness, and all of a sudden, that's what the market does. And this is where you're at right now. So I think the market's gotten in balance, not out of balance. The spike high, a potential low in this area. What's the next move that we're looking for? When you look at momentum, it is down and oversold. I consider any reading under 30 to be oversold. So in a nutshell, I don't see a trend. I don't see one shaping up right away. You would need on the current pattern for me to say, It did make a trend to the upside, but to get a downside trend right here, I don't see any pattern that can throw that on the chart. In the silver-gold ratio, notice how the market is coming back. The 18-day average is 84.71. As long as the differential between the price is right here, and what you're doing is you're taking gold, dividing it by silver, not subtracting, dividing it by, and you're getting a number, and this tells you how many ounces of silver you need. Well, as long as you're underneath the 18-day average, to me, silver is stronger than gold. When we look at the silver market today, it made a run. The run culminated with the market making an attack of the 18-day average. Couldn't really go anywhere from there. It's been an oversold market that has still got one of the numbers under 30, so it's still oversold. And I see a resistance point, but I don't see a trend trade to be made out of that. In the copper market, the trend is up. The bias is up. The market was overbought. It's correcting that. Both numbers are trying to get under 70. I said it's correcting that, present tense. It's got to be under 70 to be under that. I think that you'll have a lot of willing buyers in the 451.5 zone, that 18-day average of closes. But let's face it, that's an 8-point break from here, 8 cents. I don't know what's going to break it down there given the current fundamentals. Platinum, I thought, was going to run out of steam this morning. It didn't. It might make its final run to the Bollinger Band. And you'll say, how do I know it's a top? I don't know, but that's what I expect. And the reason is each time it's done it in the past, it has worked out pretty neat. You play probabilities. You play where the Bollinger Band comes in. You play momentum. Is it overbought, oversold, pointing up? What's the trend of the market? So you could finish off up there. But now to get back to the 18-day average, you would lose the uptrend. I was surprised this was the strongest metal today. And last, we get to the dollar. Now, notice how the Bollinger Bands, which were much wider, see the black bands over here? How they narrowed in rather dramatically. That's a sign of volatility coming out, not into the market. So now the question is, what's the next move? One of the downfalls for the dollar was the jobs report pulled the rug out from under it and the market immediately fell because the market was looking for higher for longer interest rates. And for FX currencies, trading looks often, what's the strongest currency? What's the interest rate story? Were the traders long or short? What are carry trades? It goes on and on and on. Well, in this market, once the third came and it was a surprise, you fell to the Bollinger Band, and it's got its footing there. But are we trending? We are not trending. It's a difficult market. In order to get a downtrend, you have to bust through everything and stay under the Bollinger Band. Well, only 5% of the time do you do that. So I don't see a lot of trade right here. And I don't mind sharing with you. I haven't had my clients do very much this week at all. I've had them basically staying in what I call a safety zone. And I told them this morning, I said, let this wear off for a couple of days. I said, it was only Friday. It seems like it was so long ago that we had this piece of data. Now, you know, one of the things you hear me talk about with you are our free offers, like our trial to my Spider and ETF video that comes out at about 9:30 each morning Central Time, access to my written market research twice a day, the QT Market Center trading software where you can get price counts, phenomenal piece of software. The software I use in these charts is called the Linn trading platform. And yes, we use 2 different types. The futures trading kit, which contains an awful lot of what we had. What about the daily price counts? Yes, we can send you a trial so you get to see how those work. Our modern trader, profitable trading strategies. And by the way, all you do is click to select this offer, not here, but when you go to our page. Let me show you the rest of these. The Pivot Point video series is here for you. The Arun indicator, free. This is chart, free. The video courses on these. Trial, a quick trial to see the Linn research. We talk futures, options, so much more. And a trial, if you like, what I use, which is the seasonal studies from the more research. So you get all this if you'd want. How do you do it? You're going to click on that blue area. You're then going to complete your sign-up form, send it to us. We take it the rest of the way. I don't think it can get easier than that. Go to iraepstein.com, free offers. Pretty simple. There'll be an icon up here if you move your cursor, give it a click, away you go, and you can always call us right through there. I'm Ira. You have yourself a great evening. I'll catch up with everybody in my other videos, and of course, first thing in the morning tomorrow. Take care.